All right, stock started the week on a high note, continuing this little run that we've had over the past week, going into options expiration this week, and a pretty decent basket of news due out here this week, including the inflation report, as well as other earnings and other manufacturing surveys. So a pretty decent basket of news, especially that inflation. So we'll kind of get an idea of what's going on. There's been a lot of days here recently with low volume, low trading ranges. It seemed like the market's kind of waiting. That's produced some interesting kind of divergence type patterns on different indicators. So I'm going to kind of take a look at just how strong this move has been. Have we reached the parabolic stage again without even really consolidating the parabolic move we had at the end of last year? So we'll talk about that. We'll take a look at some of the oscillators that kind of denote the parabolic nature of the market and what we can expect in terms of when and how they do consolidate. And then we'll take a look at what's driving this price action here lately. Pretty much the same thing driving it since the jobs report came out a week ago Friday. So we'll talk about all that, and then our trade ideas, a stock that's breaking out in the home improvement sector. And we'll talk very common looking chart, kind of matches what the Russell 2000 is looking like actually. So we'll talk about how to trade that. So let's go ahead and get started. Today is Monday, February the 12th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Here, before we get going too far, I invite you to subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon to like our video, comment on anything that stood out to you today. Join our website at MarketScholars.com. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these other things over here on the right, including our Market Outlook live video where I review all the trades that we've done in previous videos to see whether we should stay in them or get out of them. We actually got out of a couple of them in today's Market Outlook live video, as well as we got in tonight's trade already before the market closed. Come down to the bottom, click this heart, it opens up this tab, hit that like button there. Same thing here, click this thumbs up icon, it opens up this tab, hit that like button there. Again, the more you do that, it helps get our content out to all of our followers on those platforms. That's why we always ask. It's a big deal for us. So thank you to those who click on these day in and day out. Those who don't, you can do it right now while you're watching with one or two really easy clicks. All right, let's go ahead and take a look at the S&P 500 with the market forecast indicator like we always do. We'll take a look here. As you can see, the intermediate line is still way high and above the 90th percentile. In fact, we've had a pretty decently long stretch here of the intermediate line. So the dotted line is the 90th percentile. And that's the extreme level in this oscillator. Right, as you can see, earlier in the year, we never really got above the 90th percentile. If I were to go out 5 years, 2021 had a pretty decent period coming out of the reopening trade. But you can see there were a lot of fluctuations up and down, but a few extended periods of time above 91 there. This is probably the longest time that we've had for a while that we've just been bullish almost the entire time. One little dip there and a couple little dips after, but really we've been above this 90th percentile. In fact, the market sentiment line got above the 90th percentile, which is very hard for it to do. And it's falling right now still, but still it's at the 89th percentile. So very strong long-term sentiment there. The near-term line dropping down. We did finish with a small loss today. Your momentum line actually continued down, right? It's been in bearish territory now 2 of the last 3 days. After peaking here again, just barely inside of bullish territory and well outside the low, below the lower reversal zone. It's already down there, so it kind of makes this move that we've had since. According to the momentum line, probably is like, we probably shouldn't be, the near-term line probably shouldn't have gone up, at least stayed up for that long. Now, it's not in the reversal zone anymore, so it is down, but we'll see how much further, if it comes down this week, how much further it does come down. Your NASDAQ 100, which has been the big driver, a lot of this action, you can see it was down to about 0.5% today, despite some strength in some of the chip stocks. Of course, its momentum line also dropping. Now it's actually almost in the low oversold territory. The near-term line's out of the reversal zone. Again, it got up there without the momentum line. Your intermediate line's above the 90th percentile, just like the S&Ps. Market sentiment's just as bullish. Your Dow probably is the one that came the closest to getting another cluster today until we came off of the highs, right? Once we came off the highs, then it brought both the near term and the momentum line down. So kind of looking similar. The momentum line at least rally because we did finish up 1/3% today, unlike the S&P and the Russell. The S&P and the Nasdaq. Your Russell is the one that's made the big time move. It was up 1.75%, nearly 2% at its highs. Big near-term line now crossing above the 50th percentile, so you have dark green shading. I mean, look at that 3-day rally. That's a pretty decent 3-day rally that literally just kind of came out of nowhere there. Your near-term line, again, taking off into the reversal zone without the momentum line. The momentum line ended up dropping today, despite the fact that we had above average range and we rallied. Your momentum line actually did not rally, so that came back down. Your near-term line again at extreme highs. So kind of a unique pattern to what we're seeing here relative to the other indexes. Remember this old high point that we had at the end of the year. If you look at the S&P 500, we're well above that high point. There's the equivalent high point right there. So we're well above that on the S&P. The Russell is actually still below that. Hence why we're kind of making a little bit of an oversold bounce on the Russell 2000 relative to the S&P 500. Of course, some of the other major asset classes we look at, the dollar, you can see that its short-term sentiment had pulled back and it's slowly bouncing with a strong bullish posture there. The 10-year yield rallied off of its lows, but was down about almost 2 basis points today. So not really that much of a move there. You can see its intermediate line's also in bullish territory, and it kind of looks like the S&P 500 where the the near-term line's dropping and the momentum line's back into bearish territory there. And then finally crude oil, which has been a big mover. You can see the bullish posture it has and how that's reflecting into commodities, which has now turned dark green shading in the green line for the first time in a while, long while. Commodities have done it. The intermediate line taking off, momentum line almost in oversold levels, like some of the large cap indexes there. Bitcoin has been making a nice little run here lately. Bitcoin the last few days, just like the Russell 2000, really breaking out, breaking up above 50,000 today, getting up to a high of 50,675. Its intermediate lines in the reversal zone. The near-term line looking very much like the the S&P up to extreme highs. And then again, your momentum line is dropping as we end up here kind of with a smaller range. But you are back to a pretty decent level up above a rising moving average. So you have, and the intermediate line crossed back above its market sentiment line. So you have rising. And keep that in mind too about the Russell. Because remember the Russell, it's as bullish as we are, its intermediate line is actually still below market sentiment. So that's the one unique thing about the Russell that the other indexes don't have. Whereas like the large cap indexes, all their intermediate and market sentiment lines are all in the upper reversal zone as we speak. If you take a look at the weekly chart for the S&P 500, again, this would be 15 out of 16, right? So another nice little rally up here, higher, as of right now, a higher high, easily a higher Hakunashi close. The actual size of the body is kind of sitting right where the average, the 3-week average is. And again, you're at 6.82, which is a pretty good significant move higher than where we were last week. We are now almost to the 92nd percentile in the last 20 years. So very, very wide. The gap between the 10 and 40 week exponential moving average continues to really widen out because of just how bullish we've been. Obviously, from a 3 green arrow standpoint, we're still looking good all across the board. Even IWM has the 3 green arrows that we got on Friday, and then we're following up on that here today. So dark green shading on all 4 of these indexes now that the Russell 2000 is caught up. Bullish and above the moving average there on SPY. IWM also, its 8 and 17 day moving averages breaking up above it their 30-day, as the MACD is above its moving average and rising. The stochastics is above its moving average and back into bullish territory there. So things have improved in 3 days, have improved dramatically on the Russell 2000. If we take a look at some of these other oscillators, like the DMI, you're back to a parabolic move with the positive indicator up above 40. your negative indicator at least below 15 as we speak. Remember, the Russell 2000 was the one that wasn't doing anything until today. Right now, today, you can see its positive indicator broke above 30. It's negative, it's dropped below 20. So after about a week of both lines being below 25, you've really broken back out now to the upside on the DMI for the Russell 2000. Your RSI and CCI continues to look very strong for the S&P, especially on the weekly basis, up still around 74 and still above positive 100. For the Russell 2000, you can see you're climbing again, back above 60 on the weekly, almost back above 100, as the daily chart shows some really bullish patterns, easily above 60 and above 200 today. So very, very strong move in that regard. Looking at the Ichimoku cloud, you continue to have you're above 17 now on the trend strength indicator. IWM, which was trying to, kind of been flirting back and forth with weak bearish to back to weak bullish, still doesn't have a trend at all. So that kind of goes to show, as bullish as we've been in 3 days, there's still no trend right now, according to these indicators at the bottom. You do have a significant change in the 26-day rate of change. We've now really gone up to the upside, well above the low point from there. So a nice change after being bearish for the past few days on the rate of change. You're back to being bullish there. Let's take a look at the intraday chart. Oh, excuse me, the Bollinger Bands. We didn't look at the Bollinger Bands. We are still in the upper quartile, and we're still above the Keltner channel for SPY. IWM, on the other hand, broke above after a really low bandwidth. It broke above the upper band, and we broke above the upper Keltner channel. That's a breakout move for the Russell 2000. Increasing momentum with red dots. You're probably one more day away from turning green. So we might be breaking out right now on the Russell 2000 to a point that may lead us going up here for a while. Looking at the intraday chart, you can see a new high today. We're continuing to trade right around 100, have been for a while. After that one touch on the bearish line, we're back to 100. We're almost back to zero. This will hit zero in just another day, the low point. Then we'll really start to ramp up that low point there. IWM, if I were to take a look at IWM here, it got a new high point. So this is a significant change for the Russell 2000. You can see we got it on Friday and then again today. And then the red line's actually almost back down to zero after having crossed below 70 there. So nice change, pretty dramatic change in sentiment for the Russell 2000. After a week of this significantly weak bearish volume and bearish ranges, none of that changed today. So we're back to a 3.25 point range today. Very low volume. You can see those numbers are really, really small. The average range is down to 0.79, so you've now slipped below the 0.8 mark. The volume continues lower, so we are pretty extreme on the weekly chart. Now again, the weekly range is we still can add to it. It's only 3 points right now, and the average is 10 points down there at the bottom. But you can see, we're sitting right at that 2% mark, which is a very, very low level extremely low level for the range. So it's not just the volatility, the VIX, it's really low. It's also, and it's not just the VIX either that's been low. When you look at the VIX, it rebounded as it always does on Mondays. It jumps up pretty significantly here, up to 14. But if you look at the VVIX, it's actually jumped up to almost 85 with the correlation down. So it kind of gives you an idea of, and really that volatility too, when you look at it on a moving average basis, jumping up above all these moving averages, back above the 30, 50, 8, 17. So pretty significant change. You see that in the skew chart. So if I were to take a look at the skew chart here, you can see it jumped up to 156 today. That's a big number, 156. Remember, anything above 150 is a significant move to the upside. So that's a big number for the skew, and it generally gets this high. In fact, it's not just the average. It's not just the actual index itself. The average now has eclipsed 150. Again, it did that in 2021 as well. It's the only other time in the last 20 years that the skew has been above 150. The average of the skew has been above 150. It got up there right before the fourth quarter of 2018. It got above 145. And that was the only time. And there's been a few other instances of getting above 140 during 2017, and then 2018 ended up being a really volatile year. And you can see some of the other instances got above 125 right before the bear market started. Got up above 125 again, almost 127.5 right before the 2011 credit crisis there. So there's been times where skew has really reflected some growing bearish, and concern on a extreme level, right? This isn't just the VIX. This is an extreme level of protection because it goes out to very, very far out of the money options. But that's the kind of market we're in. We're just kind of grinding higher to the upside. But VIX complacency is extremely low, and concerns are out there for a significant move, like more than just one standard deviation. And keep in mind that going all the way back to the October 27th, we closed at 410.68. Volatility was over 7 points higher than where we're at right now on that day. And then now going all the way out to today, a one standard deviation move to kind of give you an idea from then until now is 464.11. Let me bring up this chart and give you a sense of. So from here until now, one standard deviation was 464.11, was right here. That is about, so barely above these old high points. That was where one standard deviation move was. Getting all the way up to 598. Right, the odds of that happening, it was a 15% odds that we would close at 464. So that's not even a high. That's not even a low value. But it's less than 5% odds that we were going to close where we're at right now. So it's extremely low odds that we would get here. And now we have in this amount of time. So, and it did it then. That's the kind of move it had then. That's the kind of move the market is pricing the skew for. But obviously to the downside. If it can make this big of a move off of a volatility level that didn't warrant it, imagine the kind of move it can make now after such extremes, after such a parabolic move. Because again, I showed you the daily DMI, but you can see like what the weekly DMI looks like. It continues to just march up and up and up to some of the highest levels we've seen since that early part of 2018. We're at 28 now in the ADX. The positive indicator again almost at 40, which is unheard of for the weekly to get above 40. The negative, it's not unheard of for it to get this low. It's just for it to be this low and the positive to be so high. That's why our ADX is rising so strongly. Again, kind of getting back to levels that we saw coming off of extreme bearish lows with high levels of volatility that we just did not see here at the end of October of last year. All right, now let's take a look at what's driving the price action. Look at the big move. IWM is really, it's had a pretty good start to this 3-month period here, but now it's up 20%, Q's up 15%, developed markets up 9%, emerging markets not so much, but they at least are performing better. But today was all about all IWM. Big move higher in the small cap index. The Q's were down. Remember, it all goes back to when the jobs number came out. We had the big jump in yields on that day that the yields jumped higher. Again, it put a lot of pressure on IWM, and the Qs did really well. But then the last few days, IWM has really taken off. 3 days, boom, boom, boom. It's gone from a gain for the Qs of over almost 2.5%, but a loss for IWM about 1.5%. Now IWM is outperforming the Qs. EEM really gaining some ground too. And all of this despite the fact that you have the strong dollar that hasn't gone up anymore, but it has been stronger, commodity prices that are rising, and yields that are higher. Again, they're not pushing the new highs, but they're maintaining the gains that they've had since that jobs report came out. So very important, fascinating pattern here to see what's really driving this. I mean, you can see even developed markets are not doing as well and relative to what those emerging markets are doing. When you look at the 12 grid here, you can see the charts for the bigger ones in both in developed and emerging, and you can see some slight gains in France and Germany and Italy over there on the right. But you can see China doing well today. Korea really breaking out, getting you dark green shading and at least a yellow line right now. Brazil that has still has a red line, but at least it's got the light green shading. In fact, everything is light green shading or dark green shading. UK is probably the weakest one of the group. And the US, if you look at how the sectors are performing here, so let's go to a sector comparison chart. Again, let's go to that same time frame of when the jobs numbers came out a week ago Friday. Again, you can see XLK, XLY, XLC have been the dominant. In fact, those are the only three sectors that are outpacing the S&P 500 over the last little bit. Industrials, financials, healthcare, material, and energy all gaining too, but lagging the S&P. And then your safety trades down at the bottom, material, staples, real estate, and utilities down there. If you take a look at the relative rotation graph for those, you can see again, let's go to a daily chart, the rotation in those areas. XLK and XLC moving down to the left. XLY is moving up high. In fact, it now has the strongest momentum. It's really gaining some ground there. Industrials, materials also gaining some ground. Utilities and real estate are really red from a relative strength standpoint, but their momentum. In fact, XLK and XLC have the worst momentum along with financials right now. They have the lowest three momentum signs, whereas energy, industrials, and discretionary are your top three. So kind of rotating into some cyclical there, but the safety areas, utilities, real estate, staples, if you look at staples is right here. All three of those are matching or pretty darn close to where. So we'll see if that rotation continues. You have a new weekly candle developing here, and you can see the weekly rotation has been suffering, and we kind of pay attention to XLK to kind of get an idea of if and when it may be kind of telling us something about the broader market and what it's doing. And it's still maintaining some very strong relative strength here on its weekly chart, though its momentum is almost crossing below 100, which would start bringing that relative strength line down and most likely bring us at least towards the 50 week moving average in this case, while we're still easily up above the 8 and 17 week moving averages. That's part of one of the reasons why we look at this chart, this ratio chart of the Qs relative to IWM. You can see it has now crossed above zero barely on its correlation with the S&P 500. So it's long term, it's a bullish correlation, though it has been temporarily bearish here. And you can see on the daily chart today, we really came down pretty hard. The last few days we've come down. We're still above the 30 week. We're still above the 200, and I've kind of maintained that as the correlation improves, I think that you can have the S&P 500 go up with this ratio dropping, but if it breaks the 200-day moving average, more than likely, especially with correlation getting back to positive, more than likely as the ratio falls down below important levels, the S&P would be falling down too. The breadth looked much better today. You had a big surge in stocks above the 50-day moving average, ended up just a little bit below. Your 200 number of stocks above the 200-day moving average jumped back above its moving average, just a little bit though. So we'll see how that does relative to last times we've seen that peak. The new highs and new lows index jumped up to over 500. You saw that as well on the McClellan oscillator today, getting up to one of its stronger numbers that we've seen in a while. Positive numbers that we've seen in a while got up to 30. Was at 45 earlier today, so we haven't dropped below that positive 500 level yet. So good breadth today. Let's see if it sustains over the course of this next week, heading into options expiration for this month of February. All right, that brings us to our trade idea of the day. Let's take a look at Lowe's, the home builder. Also, not the home builder, but the home improvement store, also broke out. Dark green shading, green line, intermediate line crossing above its market sentiment line. The near term line also crossing above the intermediate line. So you kind of got both bullish breakouts on the same day. You're more than 5% up above the moving average. You're also kind of clearing this old high point, where pre-expiration high point with those clusters there, That was kind of a short-term peak. If you take a look at the weekly chart, after a few weeks of transition candles, we got a little bit of a bullish candle last week, definitely a bullish candle this week, and a pretty decent size. Your PPO starting to rise up again, so good chart from that perspective. Obviously, you have 3 green arrows here, breaking out of the value area, breaking above those highs. MACD and stochastics turning up. 8 and 17-day moving average just crossing above the 30-day moving average. We've got crossover breakout patterns coming out all across the board here, breaking up above 30, well below 20, like below 10 already on the negative indicator, which might limit a little bit of the returns. We'll have to see. The stochastics, you can see the S&P stochastics is way high, but lows just now breaking above its moving average down there. You can see if I were to take a look at the RSI and the CCI, they're just breaking out as well. RSI breaking above 60, CCI breaking above 200. So breakout patterns everywhere on this. The Ichimoku cloud. Ichimoku cloud here. We haven't even started a new bullish trend yet. Just barely started a weak one today. And you're above the cloud, a strong positive rate of change. And you won't be surprised to see that we broke above the upper Bollinger Band and the upper Keltner channel today, with the momentum line just turning positive. Here, momentum turning positive, and still don't have a green dot. So we haven't even, again, really gotten started yet. So what I decided to do on this was to do a long call vertical spread, buying the at the money in March, selling 1 strike away at that low 30s delta, or around mid 30s delta. Gives me a little bit more than a 1-to-1 reward to risk ratio, so it ends up being again, position sizing for about a little less than my normal directional risk, and getting a little bit more than 1-to-1. So pretty decent flexibility on this. The options market's pricing this in for a pretty decent high odds of success, considering the lower premium that you're getting, lower maximum gain, that you're getting on this debit spread. Alright, well, that does it for today. You've heard from me now, and I want to hear from you. Use that link popping out in the top right corner of your screen that takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video, join us at marketscholars.com. Follow and like me on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all next time.